The markets are in turmoil as technology stocks plummet and the U.S. dollar weakens, all while the Federal Reserve's potential rate cut looms large. This week's chaos began with major stock indexes falling sharply, with tech giants like Dell Technologies, Dell, taking the lead in the sell-off. Meanwhile, the dollar lost ground against the euro, fueled by recent U.S. inflation data that kept the door open for a September interest rate cut. But here's where it gets controversial. Even as the Fed hints at easing, traders are divided on whether this signals a long-term shift or just a temporary pause. Dell's plunge of 8.9% came after it reported higher-than-expected costs for AI-powered servers, a trend that mirrored broader tech sector weakness. Companies like Nvidia, NVDAO, and Broadcom AVGAO also fell, with their shares dropping 3.3% and 3.6% respectively. The Nasdaq fell over 1%, and the S&P 500 Tech Index dropped 1.6%, reflecting a broader sell-off in innovation-driven stocks. The U.S. Commerce Department's PCE data revealed a 0.2% monthly inflation rise in July, matching economists' forecasts. While this keeps the Fed's rate-cutting plans in focus, the core PCE, excluding volatile food and energy prices, rose just 0.3%, a sign that inflation remains manageable. Today's numbers are exactly what we needed to see, said Art Hogan, a market strategist. It leaves the Fed with a clear path to cut rates in September and beyond. Traders now price an 89% chance of a Fed cut in September, up from 84% before the data. This follows Fed Chair Jerome Powell's unexpectedly dovish remarks last week, which hinted at a more flexible approach. The euro rose 0.11% to $1.1696, while the dollar index fell 0.09% to 97.79, signaling investor uncertainty about the Fed's future direction. The Dow Jones dropped 0.2%, the S&P 500 fell 0.64%, and the Nasdaq lost 1.15%, marking a stark contrast to their earlier gains in August. This is weakness in the tech sector, not a full-blown crash, said Zachary Hill, a portfolio manager. Yet, for the month, the S&P 500 still rose 1.9%, the Dow 3.2%, and the Nasdaq 1.6%, a mixed signal of market resilience. Meanwhile, European markets closed lower, with British banks dragging down shares. France's consumer prices rose less than expected, while Spain's inflation remained steady at 2.7%. Global stocks measured by the MSCI fell 0.5%, and the pan-European STOXX 600 dropped 0.64%. In treasuries, yields rose as investors repositioned for the long weekend, with the 10-year note climbing 1.6 basis points to 4.223%. Fed Governor Christopher Waller signaled a potential rate cut starting in September, adding to the debate over the central bank's timeline. Investors are watching closely for August jobs data and updates on President Trump's attempt to remove Fed Governor Lisa Cook, as a federal judge set an expedited schedule for her lawsuit. Oil prices also dipped, with U.S. crude settling at $64.01 per barrel and Brent at $68.12, while gold rose 0.88% to $3,446.75. What do you think the Fed will do next? Share your thoughts below. This is a pivotal moment in the global economy, and your perspective matters.